This is Wall Street Confidential. I'm Farnoosh Sharabi here with Jim Cramer. He's got a changing sentiment on oil.
Well, when we have this unemployment number that is so bad, you have to start reconfiguring what you're willing to own in terms of cyclicals. Now, my thesis is the same as always. The supply problem is what drives oil. But I also have a discipline which just says, respect what big money's going to do. And my thinking is that big money's going to look at this employment number and say, well, what could possibly be cut back by the American consumer because the employment number. And they're going to reach the conclusion that it's gasoline. I think that conclusion's faulty. I think that conclusion is too U.S.-centric because oil demand away from this is big. And it doesn't include the supply problems that are quite evident if you read Chevron's report this morning. But I respect what the market could do. So I think we're back in one of those periods where you're going to see oil slide again. Oil futures slide again and oil stocks slide again. They've had a magnificent move. So I'm saying short term, what I'm doing with ActionAlertsPlus.com is selling a little bit of the drillers and selling a little bit of the oils and then getting ready for the next big sell-off to buy them back. They're too cheap to sell. I mean, the cash flow is gigantic, but they're not too cheap to trade around because what we've seen time and again is it's very easy to put that article in the paper that now copper has to come down or now oil has to come down. There are certain themes that you'll see in the papers constantly, and big money does work off these precepts, and one is that if the economy's really weak, you sell any commodity. Okay, so boom, we have a weak, boom, we got a weak economy. Boom, you sell the commodities. Another one is the Fed pushing on a string. Well, I don't really care if the economy gets better. I really don't. What I care about is whether the stocks get better. And because ultimately the economy will get better because we'll lap easy comparisons. I mean, the people who say that we're pushing on a string don't understand that all we have to do is have to have a couple of months of home price not declining, and the crisis is over. All the crisis is predicated on home prices continuing to decline. They went down 6% last year. So, I mean, there's a lot of canards out there. And you initially have to obey the canard. And in this case, it's that the commodity prices will come down. But then you have to switch direction for any commodity that's in short supply.
One stock that's a bellwether in this sector, Jim, that you think we should really focus, because I know you tell a lot about going back and checking earnings statements or conference calls because this particular company is really sort of the bellwether of that industry. Is Exxon one of those companies?
No, Exxon is more of a bank. It doesn't drill a lot. Chevron increased dramatically the amount it's going to drill, and they're spending something like $50 million a day. And there's just some huge amount of number. It's in the conference call. But Schlumberger is still the company I care most about. Schlumberger said that 2008 is going to be a flat year. And I have taken my cue from that. And then when you layer on this employment number, you have to understand what remember, I'm telling you what the big money's going to do. I am not saying that the big money's right. I am telling you what they're going to do, and these could be two different issues, but I have long since learned that you must respect the big money, even if you think they're wrong, and then you can play your thesis out after they've done their damage.
Thanks, Jim. Now stay tuned for a special offer on how you can trade with Jim Cramer.
That's your action point. Take advantage of it.